Gold hit a 4-week high earlier this week, but with rate hikes on the table, the metal struggles to breach through key resistance. How do the technicals look for the metal? As we close off the week, we have the gold forecast, Gary Wagner, joining us now. Gary, so happy to be back with you.
Great to be here. Great to be here as always.
Well, Gary, we saw some action in gold this week. Let's pull up a daily chart now. Look at some key levels you're eyeing here, Gary. It was a volatile week for the metal.
Absolutely. Absolutely. Now, we did get a nice bounce. And really, as the market came down earlier, I thought it might go as low as about 11.15. But we did have a key level at 11.21. And we had a double low there. In other words, it was an equal low that we had both Wednesday and Tuesday. And then, of course, on Thursday, we saw the market really take off where it shot up $20. So, yeah, we have great support at 11.21.
And Gary, what do you think was really behind the movement we saw in the gold market this week? And what will you be paying attention to next week?
Well, I think that we've got an interesting scenario brewing. Of course, my belief currently is that gold, once it hit that bottom at about 1092, was a significant bottom. And although there are many people out there that believe that gold could go lower, and it could, I felt that once we bounced off of that, we really started to build a base. And that got me a little bit excited. We talked about that a couple of weeks ago. I think that we're continuing to move on that rally.
Well, let's take a look at gold longer term here. We have a monthly chart. What are the key levels you're looking at here?
Well, the key level on this, we've got two levels that we've put in there, and they're both Fibonacci retracements. The longer term looks at the move from 300 to 1900. The 50% retracement comes in at 1092. That's where we got that number from, and it matched up quite eloquently. However, there's one other number, which is a 61% retracement of the last leg of that move, meaning 700 to 1900, and that comes in, I believe, at 1156. So that's a number I really would like to see us take out. Without taking that out, we do not have confirmation that a bullish move is really ahead of us. And that's the key level we have to watch.
Well, Gary, now that Yellen has come out saying that the central bank is looking to rate hikes this year, is there still hope for gold, Gary? How are the technicals set up?
Well, it's interesting. Yellen came out and spoke yesterday, and she really wanted to, a lot of people said, to kind of soothe or calm the market. My feeling was that was only part of it. I really think she was using yesterday's speech as kind of a litmus test to see how the equities, the U.S. equities markets would react today. And the equities markets today rallied strongly and rallied up a couple hundred points. The other thing that we have to really be noteworthy of is that her speech really sent bullish sentiment to the dollar. So even if gold is going to maintain any kind of an upward move, it's going to be done swimming upstream because it's going against the current of a very strong U.S. dollar. So those are the push and pull, so to speak, that we'll have to look at in terms of where gold prices are headed.
Well, we'll see what happens next week. Gary, thanks so much for speaking with us, and have a great weekend.
It's always my pleasure, and I want to wish all of our Chartist viewers a great weekend and prosperous investing and trading next week. We'll talk to you real soon. Bye-bye.
Thanks, Gary, and thank you for watching this edition of Chartist with Gary Wagner. We'll see you next week.